Have you ever thought about investing in something as fundamental as water or agriculture? These aren't just commodities on a chart, they are the lifeblood of our world. With growing populations, climate change, and shifting diets, demand for clean water and food continues to soar. Investing in these sectors can offer both financial returns and a way to support essential industries. Let's start with water. Water scarcity is already a global concern. Regions around the world face droughts, aging infrastructure, and rising consumption. Companies that provide water treatment, infrastructure, and technology are poised for growth. You can access this theme through ETFs that track water-related equities, such as utilities, pipeline operators, and equipment manufacturers. By buying shares in a water ETF, you gain diversified exposure without betting on a single company. On the agriculture side, global food demand is expected to increase by nearly 50% by mid-century. Farmland itself can be an attractive asset. Agricultural real estate investment trusts, REITs, own and manage farms, orchards, and timberlands, distributing most of their rental income to investors. You can also consider ETFs focused on agribusiness, which includes seed producers, fertilizer companies, and farm machinery manufacturers. These firms benefit when farmers expand planting or adopt new technology. For those comfortable with more advanced instruments, commodity futures offer direct exposure to corn, soybeans, wheat, and even water futures in specialized markets. Futures can be volatile, so they suit dedicated traders who understand margin requirements and rollover costs. A simpler alternative is a mutual fund or ETF that holds a basket of futures contracts, smoothing out some of that volatility and letting you participate in price movements. Understanding the fundamentals is crucial. Track global crop yields, weather patterns, and water usage data. Pay attention to emerging markets, where rising incomes increase meat and dairy consumption, driving feed crop demand. In developed nations, governments invest in water infrastructure upgrades, creating opportunities for engineering and construction firms. By staying informed, you can spot early signals before the broader market reacts. Now let's look at practical steps to build a balanced portfolio in water and agriculture commodities. First, allocate a portion of your equity portfolio, perhaps 5 to 10%, to this theme. You might split it between a water ETF and an agriculture ETF or REIT. This ensures you benefit from both ends of the food and water supply chain. Second, consider tax-advantaged accounts for these investments. In many jurisdictions, holding long-term ETFs in retirement accounts can defer capital gains taxes, boosting your net returns over time. Third, watch correlation with broader markets. Commodities often move differently than stocks and bonds. In periods of inflation or geopolitical tension, agricultural prices can spike, while water stocks, seen as defensive, may hold up well. This diversification can reduce overall portfolio volatility. Fourth, stay aware of ESG credentials. Look for funds that follow strict environmental and social governance criteria, avoiding companies with poor water management or unsustainable farming practices. Ethical investing not only aligns with your values, but can shield you from regulatory risks and reputational damage. Fifth, set clear entry and exit rules. For ETFs and REITs, use limit orders to avoid buying at peaks. For futures-based funds, be mindful of roll costs and check the fund's methodology to ensure you understand how contracts are managed. Finally, monitor geopolitical and climatic factors. A major drought in a key agricultural region or new regulations on water usage can create sharp price movements. Regularly review your holdings and be prepared to rebalance if one segment outperforms dramatically. Investing in water and agriculture commodities is more than chasing returns. It's a way to participate in solutions for global challenges. By combining ETFs, REITs, and selective commodity exposure, you build a resilient portfolio that stands to benefit from long-term trends. If you found these insights valuable and want more practical guidance on thematic investing, subscribe to the channel and hit the bell icon. I'll continue sharing expert strategies to help you grow your wealth while making an impact.